Hey folks, welcome back to Real Estate Investing Unmasked. Today we're going to answer a question by one of my subscribers. That question is, Bob, what are my options for mortgages as a first-time home buyer? So I turned that question over to Mike Harris. Mike Harris is a radio talk show host that also happens to have a mortgage company. And he's on the radio at KBTA in Ventura, California every weekend. And he's also on K-Earth 101 every other weekend with his show, Your Real Estate Life. Now I called up Mike and I asked him a couple questions. I said, I have some people that are asking about first-time home mortgages. And what he told me was there's not a whole lot of differences between first-time home mortgages and just a mortgage for anyone. The reality is, if you're a first-time home buyer, you're going to use pretty much the same program as somebody who's not a first-time home buyer. Let me run down some of the home buying options you have as somebody who wants to buy a house. Now, we'll start off with somebody who has less income, and we'll work our way from there. There is a program that he told me about called the Chenoa Program, Chenoa. The Chenoa Program is a program that helps low-income or pretty close to the median income in the area to have down payment assistance. Now that program, what they do is if your income is 115% of the median income or lower for your area or county, and you have a credit score of a 620 or higher, then they will assist you with a down payment. Now their down payment assistance is fantastic. It's actually a forgivable second mortgage. The way that it works is they give you a chunk of payment to go down on the house. You also get a first mortgage, a first lien on the house. After 36 months of making payments on time to your first mortgage, they forgive the second mortgage, which is phenomenal. So that is the Chenoa program. The second program is the Home Ready program through Fannie Mae. Now, Fannie Mae's program, with the Home Ready program, is not a first-time home buyer program. It's for anybody, but you have certain qualifications. You have to have a credit score also of 620 or higher, and your income can be no greater than the median income for the area. So where the Chenoa program was for people who had 115% or less, the Home Ready program is for people who have the median income or less. And the benefits of a Home Ready program is essentially you get to put down 3% as your down payment. You have to have a 620 credit score or greater, and you only have to pay mortgage insurance until you hit the 80% loan to value ratio, which is phenomenal. With the Fannie Mae program, with Home Ready, you can actually get your down pay assistance from somebody else, from a family member, from friends, or whoever. Okay, so you don't even have to come up with your own down payment on that. For the FHA loan, which is the most widely used loan, you have to have at least 3.5% down if you have a credit score of 580 or above. If you have less than a 580 credit score, you're still not out of the woods yet. You just have to have a larger down payment. It's going to be a 10% down payment for those that have credit scores between 500 and 579. This is as of right now, November of 2019, that you can do that. Now, there are some limits on what kind of mortgages you can get, on the amount of mortgage you can get. For instance, with all three of these, the conforming loan limits, as of today, they were just announced for January the 1st next year. The loan limits are going to be $510,000 is the loan limit compared to $480,000 last year. Now, if you're looking to buy a home in an area where the median house price is more than 115% of that $510,000, then you actually qualify for a higher amount. Quite often, when you go above that conforming limit number, though, the $510,000, you get into the realm of what is called a jumbo loan. Now, with the jumbo loans, with the Home Ready program, or with the FHA program, if you have the 500 to 579 credit score, those are going to be parts where you're going to be paying a higher interest rate. Those are the main programs. There's another program that's a USDA loan. Quite often with USDA loans, you can borrow up to 102% of the loan, depending on the situation with the house, with the property. Another program is the VA loan. Now, that's only for people who qualify for that loan, which are going to be your military service people. There are potentially some programs out there, grants that are available for people who work with police, fire, possibly nursing. You got to look in to see if there's any specific grants for helping you purchase a home. So if you work in a specialized force or specialized industry, there may be a grant to help you buy a house. And that's above and beyond these things that I have mentioned. The VA loan, I've mentioned some of the benefits about that in a previous video. You can take a look at that up above. There's also the conventional home mortgage, where you come down with 20%. And if you can do that, great. There are many people who can't, and you know what? To each their own. You do what you can do. The more you can put it as your down payment, the better your monthly payment's going to be. And that's it, folks. That's all I can think of. If you have any other loan products that I haven't come up with, or that are more regional and not just specific to your area, please let me know down in the comments below, and I'll be glad to talk about those in future videos. If you have any questions, feel free to ask down below or contact me at my website, www.watchbobonyoutube.com. And you can contact me that way, shoot me an email, and I'll be glad to answer your question. It'll be a little bit more anonymous because you won't be able to see your name down below, but I have no problem answering your questions. Don't forget to subscribe, hit the like button if you liked it. If you didn't like it, hit the downvote twice, and I'll see you next time.